sometimes we'll all see a pattern and we'll be like, yep, that's going to do this. And we'll all collab on that trade. And then oftentimes we have Anthony over there that like will take a lot of different types of trades that are higher time frame or trendline breaks or whatever it is.
I want to just take a few minutes before our final challenge to talk a little bit about the team-oriented way of you guys trading around. Like, it sounds like you guys are very collaborative in a lot of your ideas. Do you go through charts together? Do you have debates? Do you sometimes collaborate on trades? Take me through your process, because it's very interesting in how you guys are doing all of this.
So either one. We all trade very similar patterns. So we trade a lot of, like I said, a lot of divergence, especially when moving average or confluence happens. A lot of hidden divergence, and then oversold, overbought with the TDI. So sometimes we'll all see a pattern and we'll be like, yep, that's going to do this. And we'll all collab on that trade. And then oftentimes we have Anthony over there that like will take a lot of different types of trades that are higher time frame or trendline breaks or whatever it is. But I'm sure he could explain that a little better than I.
GU monthly. GU monthly.
Sorry. You look at monthly.
Yeah, look at that. GU monthly.
Okay.
The GU monthly right now.
Okay, is that pound? What are we looking at? Pound dollar?
Pound dollar.
Pound dollar monthly. And what do you see on there that's interesting?
These wicks down here to this downside for me is telling me that the liquidity grabs and the liquidity was down here, and they were trying to grab liquidity. You had a downtrend that was just recently broken here without forming a new lower low. So you have a high, a low, a lower high, a lower low, a lower high, and then an equal low, meaning that there is no longer a downtrend. So then therefore it broke to the upside back to retest that equal low, meaning therefore the overall high time frame is a buy. So I'm already in buys on this, and I'm going to continue to stack in and scale in, and my take profits at 2,700 pips.
Wow. Now, when you say stack in, you mean you're going to be adding to your positions. Do you add lower or do you add high? As it goes against you or as it goes for you? How do you
both. So as of right now, I entered a very, very low risk trades, very, very low risk. And I was actually in probably up here. So I'm in a good bit of drawdown. Pip wise, probably 200 pips. But I entered very, very low risk. So I'm risking maybe 0.5% of my account.
Right.
Very, very, very low risk. But as this market starts to turn around and I start to see buys and new highs formed, like let's say the market decides to come up here, break this high, come back down here, I'll start scaling in higher and higher positions as we're creating an uptrend, and I will continue to scale in, and then that's when I will start doubling my positions. So once I'm in profit on these big positions, I'll start doubling my positions. So I'll start dramatically increasing my lot size to where I'm actually catching 2,700 pips, but I'm scaling in so dramatically that I'm only risking when I'm in profit.
Right. Can you give me an idea of your initial position on this type of a trade, because it's obviously huge stops, large stuff. In terms of percent of account.
I think I'm in about 50 standards here, and then 50 standards down here, and then I actually just recently hedged my 250 standards with a sell of 100 standards. Because I think now that it broke that low, we're going to see it come to this low now. So I hedged my two buy positions with an equal sell position, so I can no longer go more negative, and then I will close my sell when it hits my entry, and then rebuy again, so my account actually stayed the same level of margin the entire time.
Interesting.